Bitcoin and gold are two strategic monetary assets shaping the future financial reset taking place in the global economy. This channel focuses on covering Bitcoin (BTC) technical analysis, gold (XAU) technical analysis, and how institutional capital flows between these two assets. We always start our Bitcoin daily technical analysis with a BCG simplified market structure dashboard to give us a snapshot of the current Bitcoin price action. The dashboard looks at three core areas: price movement and price zones, trend and swing direction, and current volatility. The dashboard for Bitcoin remains unchanged since our last report. It is structurally bearish. What has changed is the pattern of higher highs and lower lows on the daily time frame has been broken, and that means the lower time frame buying was confronted by sellers. We always give you three numbers on our analysis, and these three numbers, if you take nothing else away from this video, are your key price levels you need to look at. The numbers to have remain unchanged since our last analysis, and they are as follows: $90,500 resistance level, $75,500 equilibrium level, $60,000 support level. In today's analysis, we cover: what is current price action telling us? Which price level are institutions defending? Which price levels could change structure? Welcome back. We are BitcoinCapitalGold. A global financial reset is quietly unfolding, with governments and major institutions positioning for a future where Bitcoin and gold form the foundation of the next monetary system, replacing our broken global fiat system. This channel's only focus is just these two assets, Bitcoin and gold, using structured technical analysis to understand market structure and researching how capital rotates between these two strategic assets. If you want to stay ahead of this far-reaching monetary shift, this channel is designed to help you understand this move early. Let's get into the details. The market phase is mixed. Bitcoin does remain bullish on the yearly time frame, but it hasn't finished correcting. Monthly trend remains undecided, and weekly trend is also down. On all three time frames, the swing direction is down. What has changed this week is that sellers have erased 6 days of buyers' action, which we look at shortly. At present, neither buyers and sellers have the upper hand, and we remain in neutral territory. Eventually, this will break, and we will cover what we think will happen in our weekly report. Last week, we broke out of the dominant range, a range defined by just two bars, on 5th high at $73,168 and 6th February low at $60,000. Price was trapped in this range for 1.5 months. However, what has happened this week is the gravitational pull of the dominant range has dragged price action back into its radius. Buyers were only able to marginally close above the 5th February for just 2 days before sellers overcame them and price moved back into the range. What does that tell us? It tells us, for now, buyer strength is weak. On the flip side, the equilibrium point sits at $75,500, and we're ebbing and flowing above and below that balance point. Price can, for now, go either way. Buyers this week reached a high on Tuesday, 17th March to $75,954, but from there, it was the tipping point, as sellers on the 18th and 19th March swept prior day's lows to bring price action back to the equilibrium. It will be interesting to see how today, Friday, closes, with the probability that it may stay around the $75,500 equilibrium. There is little to no direction in the current price action, other than testing and failing the high of the dominant range. So far, the dominant low has not been tested at $60,000. Can our Fibonacci zones give us more precise information? Yes, they can. The Fibonacci resistance zone sits between $74,612 to $76,039. We see that Tuesday, 17th March, tested the higher price zone, but the long upper wick shows rejection. And when 2 days later the price fell, that made it clear that Bitcoin's price was rejecting $76,000. There's a fair bit of support at our Fibonacci support zone, which sits between $63,348 to $63,988. In our weekly report, we will cover where price may go should it break this zone. For now, the current price sits below the Fibonacci resistance zone and above the Fibonacci support zone. Can our volatility provide us with any more clues? Well, volatility is confirming what we see with our price action. There is no commitment from either buyers or sellers. The buying frenzy of week 11 produced a 10.81% positive move, but with the selling, the range has neutralized this move, and ranges are roughly the same. Week 12 has still to close on Sunday. The monthly range tells us the story that ranges are declining from $22,222 to $19,344, and the unfinished week's range of $10,805. Looking at the closes, week 12 has a range of negative $2,587 and shows it has canceled week 11's gain of $6,696. The monthly is showing a positive of $3,238 after 5 months of negative closes. It's a small sign, but one that shows a reversal of the downswing. If sellers reverse this, then it leaves things open again. As an overview, this confirms we are still in a compression phase. The market is not yet trending strongly in either direction. Instead, it is building pressure inside a well-defined structure, and eventually that pressure will resolve with a directional move. With the structure and key levels now defined, the market can realistically unfold from 3 different ways from here. Scenario 1, buyers continue the move. Until buyers can break away from the gravitational pull of the dominant range and stay above it, then buyers are weak. In addition, it would need to close above the Fibonacci resistance zone, which needs to be above $76,000. Scenario 2, range continuation. We are currently trading within the equilibrium zone. If no one shows strength, then we can continue trading sideways or compressing. Scenario 3, support failure. For sellers to show strength, they must attack the lower Fibonacci support zone between $63,348 to $63,988 and be accepted below. The structural low of $60,000 has not been tested, so a break of the Fibonacci support zone allows sellers to test the lower price of the dominant range. The market remains balanced for now, but those are the 3 paths that price could realistically take from the current structure. Before we finish, let's simplify everything into the 3 numbers that matter most right now. If you remember only 3 numbers from this entire analysis, remember these: $90,500 resistance level, $75,500 equilibrium level, $60,000 support level. Bitcoin has a downside bias. But because we are still contained in the dominant range, it can go either way. What would be interesting is for sellers to start probing the downside and challenge the structural low at $60,000. What price is telling us is that buyers currently don't have strength to push the prices higher. This lack of conviction can be taken advantage of by the sellers, who could force buyers' stop losses to be triggered, cascading into lower prices. For buyers to show conviction, they must break $76,000 and move up to $80,000. If they can't do this, then upward momentum will fade quickly. If we start moving away from the equilibrium point towards the Fibonacci support zone, that shows seller conviction. We would need to see how it reacts at this zone to evaluate the strength of such a seller move. In the early part of this week, sellers have reversed all of last week's gains, and in half the number of days buyers took to move higher. It's a subtle sign, but sellers are showing strength. From a BCG market structure perspective, the key elements remain unchanged. The swing remains bearish, key price levels on the upside have been tested and failed, and volatility continues to compress. And that's your BCG simplified market structure view of Bitcoin. Do tune in on our next Bitcoin Weekly Report. We will tell you what we think will happen. You don't want to miss this. Every day, we publish a simplified market structure briefing on both gold and Bitcoin. Gold and Bitcoin are not competing assets. They are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these two assets interact is no longer optional. This channel is designed to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.